Hi, it's Mark Idem from HONU Trading with the first in a 5-part series on gaps. First of all, disclaimer, education only. Risk management is always job one. Follow me on Twitter at HONUMGMT. And if you find this valuable, take a moment to like and subscribe. So here's our agenda for today. We're going to talk about two primary types of gaps, the breakaway gap, which can either be up or down, and then the exhaustion gap, which happens generally after a strong move up or down. There is a third type of gap I'll allude to called measuring gaps. Personally, I'm not a big fan. They're harder to diagnose. In real time, they can look like an exhaustion gap or even, as we'll see, a breakaway gap. So here's the first of the four, a breakaway gap to all-time highs. Now here's Celsius, and this happened yesterday, May 10th, 2023. But you've got a stock that's basically in a long range, but recently has been moving higher into earnings. Whatever earnings were didn't matter, whether they beat, meet, or missed. The market's reaction is what mattered, and it broke away very quickly to all-time highs and 7 times its average volume for the day. Now, personally, I think a breakaway gap to the upside must be accompanied by at least 2 or preferably 3 times its average volume. Stocks can sink under the weight of normal selling, but it takes real buyers, and that shows up as volume. A breakaway gap to the downside, here's also happened yesterday, May 10th, 2023, Jackson Financial, kind of a left shoulder, head, right shoulder. Not that I'm a big fan of patterns, but nonetheless, it broke down on earnings. Again, whether they meet, beat, or miss is irrelevant. It's the market's reaction. So it broke down, traded lower, came back up. That's actually a fairly positive close in the upper half of the range, really probably upper third of the range. Nonetheless, that is not in any way, shape, or form buyable unless and until that trend changes back up. Now, an exhaustion gap, and if you look at how the slope of the 200-day moving average here in Twilio, this has been going down for some time. The 50 is well below the 200. The latest downtrend, all of your moving averages are stacked in the correct direction for a downtrend, 21 above the 8 and price below both of those. Gap, however, happened down into what I would consider support, and after a sharp move down, after a longer move down, that's what would qualify this as potentially an exhaustion gap. Now, it rallied hard on the day and closed at the very upper end of the range. Again, not buyable at all. That's an exhaustion gap example. So here's one that happened in 2021 in Tesla. Now, it had been in a range, but recently been moving higher for probably 3 to 4 months. Kind of a normal move higher. All your moving averages are stacked in the correct order, 250, 21, 8. There's a gap here, and in a moment we're going to take a look at that. Is that an exhaustion gap or a breakaway gap? But that starts a very rapid climb. I actually took this trade, and it turned out to be my single best trade of 2021. Now, the reason I have this circled is in real time, this could be considered an exhaustion gap. However, it didn't fail. It kept going. This is, in fact, an exhaustion gap. Happens after a sharp rocket ship type move, and it did fail. That's what makes it an exhaustion gap. Now, I mentioned earlier, is this a measuring gap or a breakaway gap? I would contend this is a breakaway gap. And frankly, that's what got me to take the trade. It broke above the old highs on earnings, and that began a very sharp advance. So this is what we reviewed today, the two primary types of gaps, breakaway and exhaustion. We also looked at measuring gaps, and in future videos, we'll dive into each one of these in depth. So as my buddy HONU says, small losers win.